If you receive employee stock options or restricted stock units from your employer, congratulations! These forms of equity compensation can create wealth and help you achieve your financial goals. However, this wealth is at risk due to stock price fluctuations and employment changes. To manage these risks, here are 5 things you should know about your employer stock and options that aren't included in your stock plan education resources. Number 1 is forfeit value. This is the current equity value lost by leaving your company to work elsewhere prior to retirement. This amount includes the time value of your vested and unvested options and the value of any restricted shares. Number 2 is leverage. This is the upside and downside values of your options and shares at hypothetical price increments. This illustrates potential versus risk. Number 3 is option ratios. These are the time value of your options as a percentage of the full value. They help determine the order and urgency for exercising and selling your stock options. Number 4 would be concentration. This shows the values and percentages of your company's stock and options holdings compared to your diversified investments. This is important because concentrated equity compensation holdings are risky. And the 5th, financial goal attainment. This is the current status your equity compensation plays in achieving a financial goal. Once you have secured your financial goal in a diversified portfolio, you can take more risk holding your stock and option. Equity compensation is complicated, but we can provide you with these insights and information that aren't available from your company. Give us a call today. We'll help you make informed decisions to get the most out of your company's stock and options holdings.